When you've been through the grinder a lot of times and made lots of mistakes, then, you realise that, sometimes you're better to have slightly lower profit but greater risk control.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders podcast.
Welcome to Two Traders. Walter Peters here. I've got Darren on the line. And how are you today, Darren?
I'm very good, thanks, Walter.
Excellent. Darren, we have a question here. And the question is, does strategy define your trading opportunities? In other words, is the main thing that your strategy does, is it to simply limit you from gambling your trades away by just going with your gut whenever you feel like? Is that really the main function of strategy, to kind of limit you or restrain you from going hog wild? What do you think about that?
Yeah, there's kind of it's a yes and no answer, I think, on this. Certainly for me, I mean, if we're talking about strategy, if we're talking about the rules about when you enter and when you exit, for me, the majority of my rules, at least in my mind anyway, are there to give me some sort of structure to work around. So to make trading psychologically easier. And, I'm working on the part of my strategy that makes the profit is the fact that my winners are much bigger than my losers. In that respect, like, for instance, my entry setups that I use will just be there so I can say, okay, it's acceptable to take a trade now. And I don't believe that there's like any sort of magic going on there. It's in the zone and that means that this is what's going to happen next. The majority of my strategy is there for that purpose of just making it easy for me to execute the strategy. But I don't think that that's necessarily true for everyone. But I know there's other traders. I read a Nick Raj book. Do you know Nick Raj?
Yeah. He invited me to his conference thing. He has like this. Yeah. He's a good guy.
Yeah, and he had a book where he said that all of these elements, like the moving average and the candle pattern and all of that, are not the elements that are going to make you a successful trader. And I kind of go along with that. And he said those elements really there are to give us a level of comfort, because we kind of need that level of comfort to be able to pull the trigger. And then at the same time, I know you've mentioned before, traders who just get up in the morning, they look at the charts and think, you know what, I got a feeling it's a down day, I'm going to take a sell, and there's traders that do that as well. So it's kind of difficult to say yes or no on this, because I think trading strategies come at trading from so many different angles and can be, complex and simple. I mean, this is why we're always saying your trading strategy has to be your own, because you're going to have your own little take and feel on where opportunity lies in the market. And, if someone comes along and tells you this is how it's supposed to be, you might be able to go along with that for a short while, but at some point your psychology is going to take over and you're going to buck against that.
Yeah, exactly. Yeah. So in other words, like, if you don't have your strategy, then you're in trouble, right? Because then that's gonna, it's kind of like, the geyser is gonna blow, and you keep plugging the holes, trying to stop it from going, and then it just goes if you don't hold it back. I don't know. I think in the beginning, when you first start trading, I think it's because it's all about the opportunity and it's all about, oh yeah, I want to make a bunch of money. And I think it's easy for most traders to get into that mentality of, I need to trade more often. I need to trade lower time frames. I need to take more trades. I need to compound my small little account here and grow it really quickly. I need to take on more risk. And I think strategy can hold you back from that. And you just touched on it. I think one of the main things about strategy is not simply just limiting your opportunities and defining when you enter and exit from the markets, but really it's kind of defining how you're going to make money. In other words, like the expectancy of your strategy. So like what you were saying is having a really high, having a high reward to risk ratio takes the pressure off because you don't have to win that much. While I think that strategy is good for curbing over trading and things like that, I think the main thing that it does is, and again, I think you kind of touched on this, where you kind of you get into this comfort zone because you feel like, even though you don't know what's going to happen on the next trade, you know that overall your reward to risk ratio is set up pretty well so that, your numbers are all lined up and you're probably going to end up okay a month from now, a quarter from now, a year from now, 5 years from now. It's almost like it gives you comfort because you feel like you know what's going to happen, when really, as traders, we just get paid for taking on uncertainty. We take on risk in the face of uncertainty, and that's why speculators get paid, really.
Yeah, definitely. And a lot comes down to where you see the opportunity to make money in trading. And there's kind of your close-up strategy and your long-distance strategy, if you like. And, for me, the big picture is that price is always going to move, and there's going to be sustained moves within that. And how can I then get into that without risking too much, and then how can I stay in it and get a big win? So my focus really isn't on the precise entry, it's the fact that the opportunity is there. So even if I'm just lucky, I'm in the chat, I have a chance of catching one or two of them, and that might be enough to be profitable over the long run. And then really, when I get in close with my strategy, it's okay. I'm going to have to get up and do this day in, day out, and there's going to be a lot of losers on the way, and I need to make sure that when the market really doesn't move, that I don't lose so much of my account that I'm not going to make it back. And so now, the strategy is just about controlling me. Okay, so, I want a decent amount of opportunities to try and grab one of these big winners. But if the market's going sideways, I don't want to keep trading and lose all my money. So, I'm using my strategy for entering and managing the trades sort of based on that big view. And it really is as much there just so I can get up and do it every day, and I don't think when the three rules line up that there's any sort of great predictability in it, or that it's the best type of entry, or it in itself has any particular sort of edge. It's just kind of putting me in line to try and work on that the bigger strategy.
What's the bigger strategy?
Well, the bigger strategy is that trends always occur. I look for like one rule. I like to sort of try, and we had a bit of a joke about this last week. I like to say, right, that is proven. You can't deny it. It's proven. It's true. And so if I'm going to base my strategy, my big picture on something, it needs to be something that at least I can kind of put in that ballpark of saying, this is true. It's always been true, and it's always going to be true. Okay. I can't prove that it will be true in the future, but the probabilities are that it will. And for me, that is that trends always occur. And I don't mean that price goes in one direction all year or for 6 months. I mean that price moves in one direction for a sustained period. Okay, that for me has always been true and always will be true. So within that, there's opportunities to risk a small amount and win a big amount. Okay, so that is the big picture for me. That's the truth that I'm going to try and make money on. Yep. Would you agree? I mean, would you agree with that?
I agree that you're trading your beliefs.
Good answer.
Yeah. No. I mean, I'm with you on that. Yeah. I mean, like what you've just done is you've just laid out why, as a trader, you really need to sort of hang your hat on one thing and build everything up from there. So your one thing is trends exist. They happen. They're probably, we don't know, but they're probably going to happen in the future. And we may as well take advantage of those, right? I mean, is that fair to say?
Yeah. That is fair to say, yeah. And I think, there's other traders who will kind of look at charts and say, well, at 8.15 on the euro every day, this breakout occurs, and they go kind of really in close, and they can still make profit out of that. And I think, your belief doesn't necessarily have to be true either, because of the fact that price does move. I mean, if you have a really good money management strategy, then it might just, the one thing that you believe in isn't actually true, but your money management strategy keeps you safe, if you like.
Yeah, exactly. I've seen an example of that where the money management strategy is just applied continuously it keeps re-entering the market, and it made money. So there was no real edge per se. It was just the money management strategy was the thing that made money, and all it did was it just kept taking a trade until the trade was over, and win or lose, it would take another trade immediately after, and just keep doing that, and it made money. Yeah. The other thing I wanted to touch on, because I think you just kind of glanced off of it, which was this idea that you wake up every day and you've got these rules or this strategy that kind of keeps you focused on what you need to do. And the thought that jumped into my head was, if I were working like a regular job, and I went in every day and I had a boss, and if you really kind of asked me, why do I get up? Why do I set my alarm in the morning? Why do I get up at that time? Why do I go and catch the bus or the train or whatever and go into that office? I might say, I need to make some money, or I like hanging out with these people. They're good people, or whatever. But really, it's almost like your trading strategy is taking the position that's been vacated by your boss, because you no longer have a boss. So if you're a trader, if that's how you make your income is from trading, it's almost like the trading system is the overseer, and that's, I think, where a lot of traders run into trouble, because like, who's to know if I don't follow my system? You know what I mean?
Yeah, definitely. And that's a really good way of looking at it. And I think the problem comes in the fact that we think this is the boss and he kind of knows what he's doing. But I tell you what, this looks like a good entry anyway. It doesn't fit in with what the boss wants me to do, but I'll just take it anyway. And you can definitely trade that way and make money, but it kind of glosses over the fact that when trading, we kind of need that boss to tell us what to do. And, there's certainly people out there that don't need a trading system. And I think that's half the problem. You can quite often, you're waiting for your particular setup, and you can see that there's other opportunities available, because there's endless opportunity in trading. And it's very tempting to, I'm going to change the rules for this one, and get sort of pulled around. And I think generally you're better to have that rule set if what you're looking for is longevity.
Yeah. I think Reima Huovinen, who was at the London conference, he was mentioning, someone had asked him, they said, you trade this engulfing pattern, right? This big shadow pattern. And someone asked him, and they said, well, like, if the pattern actually doesn't fit, like if it's off by 1 pip, will you still take the trade? And he said, no. He said, I can't. He said, I have to draw the line somewhere, And so if it doesn't actually engulf the prior candle, then it's not a trade for me, and I have to let those go, which is really hard when you're trading the weekly charts, as Reima does. So, that's something that, everyone has to decide, where is the line? If you don't have precise trading rules, maybe you don't have a system. And if you don't have a system, are you really going to be able to make it work?
Yeah. And I think those kind of real marginal things, you have to accept that it's not an expectancy thing. Just because the pattern's off by 1 pip doesn't mean it's going to make a great deal of difference to the outcome, but it's the psychology and it's the ongoing execution of the system, and it's the fact that if you tweak rules by a little bit, then that can get out of control, and then that's when you're kind of increasing your risk. Really.
Yeah, exactly. Yeah, and I think that's exactly what his point was when he answered that question, is along those lines of, it's about the psychology. The other thing that I think is interesting about this, Darren, is the idea of the risk manager. So if you're working at an investment bank or a bank and they have a currency desk, that the risk manager is the person who makes sure that everyone's kind of doing the right thing, and they're the overseer, and they're the one that comes over and says, you've got too much risk on, you need to lighten up on your positions, you know what your number is, you're above your number, what are you doing? And then you do it again, and the guy comes over and says, sorry, we don't, you're gonna have to leave. Because they just can't have that. They just can't have it. And I've known people who had this job, and I've known people who worked at the desk and then left. And what's interesting is the number of traders who do really, really well at the currency desk, and then when they leave, they no longer have a risk manager, and their trading can completely tank. And I think that that's one of the advantages that institutional traders have, is they have this set up. They already have it set up to where they know that someone's watching them, and we know, like in psychology, the observer effect. If someone's watching you, you act differently. And so I think there's something to that. And that's why I would encourage people listening to this to get a trading accountability partner, someone that you can speak to every week, and someone that is going to go over your trades every week and say, well, why did you do this? That's not within your rules. These sorts of things can really help you. Yeah,
well, it's kind of, in effect, the trading strategy is your risk manager. And I kind of touched on this the other week, and in my last video I did on the forum, where I use a higher time frame trend filter, and if I take that away, I make more profit, but the opportunity to mess up and make mistakes is increased by a massive amount. So you're kind of saying, well, I'd rather have the safer, lower profit than try and hit the ball out the park. And I think when you're learning to trade, you definitely go for the one that makes the most money. But then when you've been through the grinder a lot of times and made lots of mistakes, then you realize that sometimes you're better to have slightly lower profit but greater risk control.
Exactly. Yeah. And it's about longevity, isn't it? It's about avoiding the big mistake. It's about keeping it going, living to fight another day, blah, blah, blah. That's really what it's about, isn't it? It's not, sure, you can make more money if you take the trade that doesn't fit the pattern by 1 pip. Sure, you can take more risk, and maybe you just know this trade's going to work out, so you take more risk. I mean, that's the kind of thing that if you read what he says, that's the kind of thing that George Soros does. He has these occasional trades where he's absolutely convinced that he's right, and he'll just bet everything that he's this, and it's amazing to me that he's still around. And I suppose you would argue, and I'm guessing you would probably argue this too, Darren, this idea that for every one George Soros, there's a bunch of broke traders mumbling to themselves because they did the same thing that George Soros did, but George Soros was simply right when he put all his chips in. Yeah
definitely. We're really good at discounting the people that blew up. As long as one person made billions of dollars, then it's a really good idea.
Yeah, never mind the thousands that totally went broke doing the same thing. I
really think that this is why with experienced traders that discretion is, a certain amount of discretion is always more popular than being very systematic, because I think if you have a little bit of discretion, it means that you can have a strategy controlling your risk, but that constant urge to I know a little bit better, or this is I've got a gut feeling that this is just a good setup even though it doesn't quite fit my rules. It kind of allows you to play on both sides, doesn't it, to have a bit of discretion there. You can have a structured system that manages your risk, and then every now and then you can express yourself a little bit if you like. I think that's why discretion is so popular. And I think the danger is when you have too much, and then it completely blunts the risk control element.
Do you think that, I know you've talked about this in the past, that if you have a real trading strategy that you can essentially write it as code, not you, but someone that knows how to write code, or I couldn't do it either, but someone that knows how to write computer code could code it up, and then the computer would essentially do the same thing. Do you think that is that true?
Completely automated.
Yeah. So like if you have in other words, that's sort of like if we draw the line in the sand and say you have a true system when your trading system can be coded and then completely automated. Do you think that's true?
Oh God, that's a difficult question. Well, I suppose really you've got to say yes to that, really. Because if your system has an edge and the rules can be coded, then that should work. I know Tom Basso did this with his strategies, didn't he? He made them all automated, and then all he does is look at the risk, basically. So all the strategies that he's got are working away completely on their own, and then he just looks at how much is at risk at any time and decides whether he needs to kind of stop adding to his risk.
Yeah. And it's interesting because the people that are into automated trading, they like Mark Fletcher comes to mind in the forum. They talk about how it's a different style of work. People think that when you're an automated trader, it's just simply, I'm drinking my pina colada and the trading robot's just cha-ching, 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 just making money for me. But he talks about how it's still work, it's a different style of work, and it's basically what you just said. It's about monitoring and making sure that everything is going, that the risk is okay, and that you're not outside your boundaries and that sort of thing, with all these things churning away.
Yeah. And I think maybe we kind of hold on to this illusion that if we have some say in the decision-making process, that must have an edge.
Yes.
And maybe that's just an illusion we hold on because it's really comforting to believe that, because if you lay out your strategy black and white and you get your results based on a back test, maybe that is often not as comforting as we'd like it to be. Maybe we realise that our strategy isn't going to generate as much profit as we think. So we kind of start curve fitting and saying, well, I would have used discretion here and stayed in that trade longer, and I would have moved my break even up quicker there because of that. And maybe that's all just an illusion, and maybe it's just that's the comfort we kind of need.
Yep, absolutely. I think that's exactly why I believe so many traders, they like the discretionary approach. I also think that in the currency trading world, the scam robots have also given automated trading a sort of a bad name. I think that also probably more in Forex than in other groups of traders, but in Forex traders in particular, I think because there have been so many automated robots that are sort of over optimized, and they have these great historical equity curves, and then they completely collapse when you go forward with them. I think that also kind of gives it a bad name, perhaps. So I think it's both of those things that are operating, and I think that we feel like, just like when we choose our own lotto numbers, we feel like we have something to do with it, and we also, like you say, when we go back on the charts and we let hindsight bias creep in, we say, oh, well, we would have filtered out that loser. Oh, we would have filtered out that loser because of this and because of that. And so it's real easy, isn't it, to do that? I actually got an email, I think 3 or 4 days ago, from a trader who said, thank you so much for recommending Forex Tester, because I've gone back and I've tested my strategy and it doesn't make money. So he had scrolled back on the charts and thought, oh yeah, this is really good. And I had encouraged him to get Forex Tester. And once he did that, he said, oh wow, I'm really glad that I didn't go forward with this, because obviously there was some sort of hindsight bias that was making it look a lot better than it was.
Yeah, definitely.
Yeah, well, that's interesting. So I think, just to sum up from my point of view, I think that, trading strategies definitely restrict you in a way and can act as a boss, but I think there's a little bit more to it, and it sounds like perhaps we might agree on that. What do you think, Darren? Yeah,
definitely. I kind of like to see my strategy as the risk controller. So it's kind of my risk manager, if you like, and then, whether I make money is really determined by how the market moves, and not necessarily that strategy. That just stops me from losing everything.
Yeah, cool. Thanks for your time. We'll see you in the next episode. See you, Darren.
Okay, thanks, Walter.